Hello and welcome. You have tuned into the closing trades right here on ET Now. I'm Srishti Sharma and with me is Snehi Shah, and quite a range-bound trading session for the markets. But the good part is that we have recovered from the day's lowest point when it comes to Nifty as well as Bank Nifty. Nifty still languishing in the red but approaching that 24,400 level yet again. But Nifty Bank has the color of green right now with almost 100 points of gain as we speak. A lot of these newsmakers are indeed making their moves. Bajaj Finance is one of the top gainers on the Nifty 50 side, has been maintaining that leading position throughout the day after that Q1 updates coming in, and select IT counters are also doing well, Sneha.
Absolutely. So that's how the market is faring right now. But Srishti, what's not doing well at all amid select stocks? If you take a look at the sectoral moves coming in right now, Nifty Metal is tanking, a 1% cut coming in on this index. Surprising because this was one of the top gaining sectors yesterday, and that trade has entirely reversed in just a span of one trading day. You have Nifty Metal that's lower by 1% with names like Tata Steel and Hindustan Copper that are lower by 2%, SAIL, Jindal Steel, JSW Steel, NMDC, Nalco. All of them are deep under pressure. Nifty Auto 2 is in the red. Names like Maruti, TVS Motor, M&M, Tata Motors, they are in the red as we speak. PSU Bank's Energy, Nifty Bank absolutely flat with a slight hint of a negative bias. What is surprising today is Nifty Realty that has ended its 6-day session in the red and has now flipped, although very flat, but now in the green. It's up almost 0.5% as we speak. So that's Nifty Realty. In fact, that's doing very well in today's trading session. You have a very smart comeback, in fact, from FMCG and energy. They now too have made it to the green. PSU Bank's looking good. Realty, IT, Pharma. These are the top three sectors in from the least to the most in terms of the sectors that are gaining in today's trading session. But Srishti, lots of stocks to watch out for. And Trend, how can we not talk about that one? An 11% cut, Srishti, coming in on Trend.
Well, indeed, Snehi, remember when we started the show, like the morning show, rather, the weakness was actually 6 to 7%. But look at the move now. It's an 11% cut coming in on this particular counter. A lot of these news flows are already there. AGM updates, Q1 update, and yes, of course, the downgrade coming in from brokerages as well. So that stock is indeed tanking in trade. But on the flip side is HDFC Bank coming out with its Q1 updates. And as of now, we are seeing that the initial gains have been lost when it comes to HDFC Bank. Other than that, a lot of these newsmakers, specifically from the likes of Angel One, after that Q1 update coming in, that stock was also under pressure. Almost a 5 to 6% cut is what we are seeing on this particular index. And yes, the city gas distribution companies, they are doing very well, and especially stock of IGL, because PNGRB tariff regulations are at play, and that is indeed positive for IGL. So that's the stock that is in focus, and even MGL is holding on to that shade of green. But interesting moves on the markets rather, because a bit of a sharp spike coming in on both the benchmark indices right now, because Nifty has moved above that 25,400 mark, I beg your pardon. And while Nifty Bank from 100 points of gain, it's a 200 points of gain right now in just a span of minutes. So that's the take coming in on the markets, and the breadth of the market is quite even, Steven, right now. So let's see where are we headed, and let's try to connect with our experts then and try to find out that in the market right now, what should your strategy be like. And let me welcome on board Sunil Subramaniam, who's a market expert, joining us on the show. Good afternoon, Sunil, and thank you so much for your time. Firstly, help us with your take on the markets. How are you catching the pulse, and what factors are already at play?
I think the markets are going to be range bound because of the BTA expected. I think Mr. Trump has been, as usual, speaking a lot about issuing a letter, announcing tariffs again, the extension of the pause and all of that. But I think the news for India, I think, is that he's been saying that we're close to signing a deal, and our teams have been there and actively discussing with them. So I would say that that's what the fresh direction for the market. I mean, today's the regulatory announcement on Jane Street, of course, created a little bit of volatility. But otherwise, I see that the undertone of the market is quite okay. The BTA announcement plus the earnings season pan out are going to keep sector rotations happening, right? Because where we win in the BTA, those sectors will do better. Where the earnings season comes out good, they'll do better. So expect a lot of market churn. Domestic liquidity continues to be strong, and so broader market will have support. FII returns will depend on the, I think, of good PTS data coming out on terms of BTA signing from the US and India. I think FIIs are probably waiting for that to make a stronger comeback.
Okay, so that's the take on where Sunil sir expects the markets to head. But Sunil sir, the kind of recovery that we've seen from the day's low coming in all, seems like we might just be ending Friday on a cheerful note. It's names like Pharma, IT, Realty that are doing well. FMCG has once again made its way to the green. Do you believe now is the time to bet on defensives and let the external facing sectors take a little bit of a backseat in the portfolio?
Look at it, the kind of sectors which have gone up today indicates that when the data comes at the end of day, I think FIs would have made a return today. Because typically their favorite sectors are FMCG, banking, and IT, right? And those are the ones, and pharma, for example. So while you might label some of these as defensives, I think it's the FIs who are probably now with the BTA coming close are saying, okay, now things look better for India and it's their return. So to that extent, as a market participants, I think in the shorter term, it makes sense to buy what the FIs will buy. And to some extent, it's also that which has underperformed in the recent past. So if you take over the last 6 months or a YTD, right, you've seen IT underperform, you've seen realty underperform, you've seen consumer underperform. And typically when FIs come back, I think that maybe not realty so much, but definitely IT and consumption, especially FMCG, would be on their radar. So I think from a tactical play, it makes sense to smell the money and go to what because I think that's the big story, right? The FII return. They have been very choppy and volatile. Domestic flows have been consistent and buying domestic strong sectors. So I think if you then look at it from that perspective, right, your immediate reversal to mean of those which underperformed in the recent past is probably going to be the story. So I would actually pick those which actually today are actually playing out as your short-term things which will provide support to the market.
All right, so that's the take coming in on the FII flow front and the sectors that you should be watching out for. But Sunil, a lot of these updates from the financial space have already trickled in. Any trend that you are picking up within the financial basket? Because of late, yes, the credit growth has been slow, and for the major banks, it has been in the single digit, while the deposits, they are seeing an uptick. That's a double digit growth that the banks and financial companies are holding. But what are you making out of it?
So I think that's right, that it's obvious that credit growth, industrial growth is not yet picked up, and retail growth probably the first quarter of the year. People are still baking in what are the tax savings from the tax giveaways and in terms of making fresh purchases. So there's quite a big difference between the loan growth rate and the deposit growth rate. I think you're showing it on the screen also. So what this means is that banks are not now worried about deposit mobilization. That's good. They're getting enough liquidity and money now. So they might actually be tempted to cut deposit rates more going forward, which is a very big positive from a NIM perspective, because a lot of their loans, like personal loans and auto loans, are at fixed rate, and even others are at a slightly longer reset. So from that point of view, banks may now be actually emboldened to cut deposit rates further because they are seeing there's not enough credit demand growth. And so in the next few months, I expect that the NIMs should be fairly strong, which is actually quite good. The second aspect is that I expect banks, which are mostly a lot in the insurance and mutual fund distribution space, right? Because some of this liquidity, if it's not getting spent, as you're seeing from the lower credit growth, is probably getting saved. And those savings are all what flowing in now into the banks in deposits, but it will also flow in through mutual fund, through a growing SIP book, through insurance. So which will lead to fee-based income for the banks. So I think from that point of view, while overall top-line growth for the banks may not be great, I think their NIMs will be fairly protected in the coming quarter.
The take on the entire banking and financial space. But while we are talking about this space, let's also bring on board my colleague Varun, who's standing by with a list of all the banking and financial names that have come out with their Q1 FY26 updates. Varun, over to you.
Well, so let me start with NBFCs, because both Bajaj Finance and L&T Finance are up in trade today after the quarterly updates. Bajaj Finance, no doubt the AUM and the deposit growth are at multi-quarter low, but they are as per guidance. Now, the AUM growth has been 25%. The company has guided for 24 to 25% growth in FY26. Also, the deposit growth has come at around 15%. The new loans booked, they have grown up by around 23%, and the customer franchisee that has gone up by around 21% on a year-on-year basis. L&T Finance, the total retail disbursement is up by 18% for Q1 FY26. But if you look, it has been aided by the recently acquired gold portfolio. The overall contribution from that was around 1350 crores. Excluding that, the overall growth has been 7.7% for this company. The company has guided for a 20% growth in FY26 in the overall loan portfolio, and this quarter the overall growth in the retail segment has been around 18%. Now let me come to Bank of Baroda. The overall global advances, they have grown by around 12.6%. The overall deposits, global deposits, they have shown a growth of around 9.1%. So it has been a good, decent growth for Bank of Baroda, although not the high 20% growth that the company used to deliver earlier. UCO Bank, the overall growth has been decent. The total deposits that have gone up by around 11.57%, advances have gone up by around 16.6%, but the CASA ratio that has actually fallen down from 37.9% to 36.9% on a quarter-on-quarter basis. RBL Bank, total deposit is up by around 11%, advances up by around 9%. The CASA ratio that has actually come down from 34.1% to 32.5% on a quarter-on-quarter basis. But if you look at the overall retail portfolio, the secured loan portfolio that has grown by around 23%, so that's good, and the unsecured retail advances, they have actually gone down by around 7%, but yes, the CASA ratio that has declined. For Bandhan Bank, the biggest highlight was the CASA ratio, which has shown a decline from 31.37% to 27.06% on a quarter-on-quarter basis. So that's a very sharp decline for Bandhan Bank on the CASA ratio front. The total deposit, total loan book, the total loan book especially has gone up by around 6.4%. And HDFC Bank that has just come, hour before, the overall advances, they are up by 6.7%. The deposit, the CASA deposit, that has gone up by around 8.5%, but on a quarter-on-quarter basis, it is down by around 0.8%, and the overall deposits that have gone up by around 16.2%. So the deposit growth has been good, the advances growth has been good for HDFC, but yes, on a quarter-on-quarter basis, the CASA ratio has slightly declined. So that's one thing for the highlight in HDFC Bank also.
So much, Varun, for getting us all
The green now, almost a 0.2% uptick coming in. We're very close to reclaiming that 25,450 mark now. So looking good for the Nifty as of now, and it's a 100-point plus recovery from the day's low coming in for the Nifty. Similarly for Nifty Bank, almost a 400-point recovery coming in from the day's low, and we are seeing an uptick on Nifty Bank right now too. In fact, it has been a sharp uptick because Nifty Bank is higher by almost 0.4%. So very sharp uptick coming in on Nifty Bank as we speak. Similarly, Sensex too has made its way back into the green, a 0.2% uptick coming in on the Sensex. Let's see if this has reflected to the broader end of the market. No, because Nifty mid cap is still lower by 0.1%, and Nifty small cap is absolutely flat, trying to edge its way into the green. But as of now, the broader end continues to remain rather flat in today's trade. But while we are talking about stocks, and the way the market is moving, and stocks that are not doing well, and topping that list today is Trent, because it's an 11.3% cut coming in on Trent. Once again, even though the market has recovered, none of that has been reflected onto the Trent stock as we speak. But on the back of this tepid Q1 business update that the stock has given, remember this number for the revenue that they've given has come in at 5,061 crore rupees, which is 4% lower than the overall street consensus of where the revenue was expected to grow. This time around, on the back of management commentary as well in their AGM that was held yesterday, they've said that growth trajectory remains underwhelming. They have given a 20% growth guidance for their fashion business, which is significantly lower than the 35% 5-year CAGR at which that segment has been growing. Also, Nuvama has downgraded the stock to a hold rating from a buy, and also trimmed the target price. In fact, we also spoke with the author of that note at Nuvama, Abneesh Roy, who has downgraded the stock. Let's go across and revisit to understand his rationale behind this move and this rating on Trent today.
Longer term, we do expect Trent to come back, and Trent will also scale up new growth drivers longer term. Zudio Beauty and Star Business, we see that longer term those can become the next big growth drivers, but it will take some time. If you see, some of the other fashion retailers have also said that because of the festival shift, etc., Q1 numbers, there was some weakness in North India. So overall, I think in trend fashion business, strong base and overall festival shift, etc., has led to some level of slower growth. There is an urban slowdown, which we have been highlighting. So it's a mix of all this. Long term, I think trend remains a compounding story. They have a vision to scale up revenue 10x, and already from a FY23 perspective, they have doubled the revenue. So we do see 250 stores addition yearly. If they can come back to a 25-30% kind of growth in the core fashion business and overall, I think the stock can re-rate post that.
All right, so that's the take coming in on trend by Avnish itself. But talking about the charts, yes, it's an 11% fall, but a mild recovery from the day's lowest point is what we have already seen on trend as well. But for this, let's also welcome on board Arpit Beriwal, Manager Derivatives Equity Research at Motilal Oswal. Hi Arpit, afternoon, and firstly help us with your take on trend, because I believe that it's now back to its May low levels. Give us your sense on the stock and where do you see the stock headed. Do you believe that this kind of a fall will take too much of a time to actually recover?
Yeah, so very good afternoon to all. So if you talk about trend as a chart structure wise, if we see overall, since almost 7 to 8 weeks, the stock was in uptrend, and the stock slowly moved from 4,600 to almost 6,000 levels. But today we have seen a big dent from the higher levels post its action, and looking at the chart setup wise, almost you've seen a correction of 12 to 13%. So talking about the level wise, the next major support is around 5,400. And if you see the setup wise, 6,200 to 5,400, now 5,400 is a major support. Further weakness can be seen below 5,400 levels towards 5,200. So it's better to wait and watch. Generally, after such a big hit, it generally takes the stock to consolidate. So 5,400 would be immediate level to watch out for. If it closes below that, we can see some more pain towards 5,200 levels.
Those are the levels to watch out for on trend. Sunil sir, before we let you go, just wanted your thoughts on trend today. The kind of fall the stock has seen, if you take a look at the numbers fundamentally, it's not, at least on the revenue front, it's just a 4% miss compared to the Bloomberg estimate. Do you believe that this kind of sharp dip that we've seen today on the stock, more than 11.5% now, is warranted? Do you believe that this is panic selling on the stock today, or do you think this chart today, or this move that we've seen on the stock rather, reflects a broader loss of market confidence in trend?
Well, I can't talk stock specific, so you'll have to excuse me on that one.
Just zoom out a little bit and talk about the entire retail space, because on one side you've seen value retail, the smaller players that are making big moves, and then you have on the flip side big players that are not making small moves at all. In fact, very insignificant moves coming in. So Neil sir, any take on how do you see retail as part of the consumption pack shaping up?
See, overall, I'm positive on retail, and I'll tell you that those retail numbers should look up, because as you know, there's a 1 lakh crore of giveaway from the finance ministry to the middle class, right? But what are they going to do with their money is a question, right? So if you now look at it from that perspective, a lot of the retail names are carrying very high growth trajectory for the past. And so the P ratio of these high-end retailers carries that high growth expectation. Okay. So what happens is that, but are people going to actually keep buying more of the high-end stuff, or is the economy's recovery going to be more broad-based? Because, PE stocks which are at a high PE in the retail space are those which have benefited from the K-shaped recovery of the economy, which is the higher value goods grew faster, whether it's in real estate, whether it's in auto, whether it's in actual retail consumer buying. It's the richer people who've been spending. The broader middle class has been off. And we have seen that for quite a few quarters now, right? Now, with this move of the finance ministry to pass on, it'll take a couple of months for people to feel the cash in their pockets, as their tax deduction comes down, the quarterly advance tax date is just over. So when that happens, the broader people are probably like to buy more mass consumption products rather than the high-end products. But those mass consumption related retailers were actually not the favorites of the market, because the market had always been pricing in the K-shaped recovery sustaining and continuing. So now when the result season unfolds, right, I expect that the broader retail, which is catering to mid-market and to the mass market as opposed to the larger end of the market to actually do better because people are going to have money in their hands. But the ones which are growing at 30-40% and the P ratio is expecting to grow, they're not
Yes.
going to be able to sustain that because at the high end, people are buying, they're buying. So I think that's the reason that valuations become very important as you now go into the retail. Overall, retail should do well, but you got to pick, I think, those where high future growth is discounted are probably going to be in for a nasty surprise.
All
Whereas
right.
those which are actually flagging a bit will probably get a leg up now, especially with the monsoon coming and the rural
Yes.
side consumption also stepping up.
No, absolutely, Sunil. It's a lot of factors at play, but yes, the high P counters are getting hammered. But thank you so much today for taking the time out and helping us with your take on the markets and very interesting take on the retail side as well. But time now to slip into a very short break. Yet again, don't go anywhere. We'll be right back with more trading ideas just on the other side.
Hi there, welcome back to Closing Trades. Last half an hour, less than that rather, left for today's trading session and for the week to get over. Shrishti, it's been a hectic week for us. But I can only imagine what next week and the week after that are going to look in terms of earnings. So, well,
And not just earnings, the Trump tariff deadline also
oh
kicking
my
in.
God,
There will be
6th,
lot
9th
news
of
flow.
July, how can we
Yes.
forget that date? It's going to be very hectic and very important for us to watch out for. So we're not going to say that this week was hectic because we know more is in store. But in terms of the market, if you take a look at the kind of recovery we've seen, it's a Friday feeling coming in for the Nifty as well, because now we're almost at the day's highest point coming in for the Nifty, now above the 25,450 mark. So good uptick from the day's low. But to discuss the kind of move that we've seen today and what we can expect to see when we come back on Monday, let's now welcome on board. We have Arpit Beriwal who's with us still, and we have Somil Mehta who's joining us from Mirae Asset Sharekhan, and we also have Mr. Sudeep Bandyopadhyay of IndiTrade Capital who are joining us on the show. And hi and welcome to all of you. Sudeep, I'll come to you first. Give us a sense of the kind of moves that we've seen over the course of the week. It has not been devoid of news flows. If that was less, we've also now have quarter one updates trickling in. The kind of recovery that we have seen from the day's low and also from the lowest point in the week. Do you believe that this is a momentum that we could sustain heading in the near to medium term and not penciling in the tariff pressure? But other than that, do you believe that overall things could be shaping better for the Nifty?
Well, definitely. I mean, if you leave aside the tariff-related uncertainties and what's going to happen or not on 9th July or even maybe earlier, because announcements may come before that also. If you leave that aside, I think other indicators are favorable for India. Including, I would say, Marico's numbers, which was, update which they gave was very interesting because FMCG companies have been suffering for quite some time due to demand challenges. But, Marico numbers which they talked about very clearly indicates that demand is back. And that's a very interesting thing for FMCG as well as overall Indian market demand scenario, which should help corporates to perform and post better numbers. Of course, we have the monsoon, which is progressing well. We have the interest rates which are coming down. So I think the macro factors are favoring. The global oil prices are definitely down and under control, which does help India. So Indian corporates should start doing well, performing well, and that augurs well for Indian markets. The liquidity also remains robust, both domestic as well as international. Of course, there will be some blips as far as FNO trading is concerned because of the SEBI's order earlier today morning, and we'll have to wait and watch that space. But by and large, I think liquidity is abundant, and that is getting demonstrated through the kind of robust subscription which new IPOs are attracting.
All right, so that's the take coming in on the markets. But yes, of course, SEBI has actually barred Jane Street Group from accessing the country's security market, citing an order the regulator posted on its website, wherein SEBI has also ordered Jane Street to deposit 4,800 crores in unlawful gains over alleged Nifty manipulation on expiry days. We spoke to experts on what does the order mean. Let's go across and listen in.
So that is a policy decision which the SEBI has to take, amend the regulation, tighten the regulation in order to see that such an event or similar events do not reoccur. This is, look, there are no, in that sense, allegations that they've done something which is not within the four corners of law. It is only that they have been intelligent and clever both in order to trade on the market. So therefore, if you see the order, prima facie, my view is that, look, they've only been little clever and intelligent in order to trade on the market. But it's pure and simple on the preponderance of probability, which is the principle that SEBI has levied this, found out this, and have passed this order. But otherwise, they've nothing illegal which they've done in order to get a slap of a huge penalty, in my view. In order to develop a proper healthy market, there has to be a regulation which is a win-win situation both for the traders, both for the quant funds, as also satisfying protecting the retail investors, and at the same time following the law in letter and spirit both. So therefore, you do require a proper regulation in order to see that the quant traders and the quant funds are able to trade on the market.
What SEBI is doing is guarding the integrity of our capital markets. The conduct of Jane Street seems to indicate that they have used through multiple entities and through multiple markets the arbitrage opportunities and actually manipulated indexes and prices in a way that will derive for them profits in one market 12 times the loss that they would incur in another. And they did this consistently and despite a warning letter. The way that the whole transaction has been described in the order gives rise, in my mind, to the clear conclusion that it was illegal, particularly because the regulation was amended to make sure that at the end of the market, if you put through massive quantum of transactions, that is going to be considered as illegal. And therefore, in my humble view, this is an illegality based on which the impounding of 4,843 crores has been made. And this is not a penalty. This is an impounding of illegal gains. Penalty will be discussed and decided after the full investigation is over and Jane Street has the chance to actually come back and make their own submissions.
Okay, so that's the take coming in from experts on the entire SEBI verdict on Jane Street. But Somil, hi, good afternoon and welcome to the show as well. Give us your sense on Nifty Realty, because in a surprising move today, Nifty Realty has not only snapped its 6-week losing streak to come back in the green, but in fact at this very moment it's also the top sectoral gainer now. So very sharp gains is what we've seen today coming in for Nifty Realty for names like Godrej, Phoenix, Brigade, all of them trading with gains of more than 2%. So Amil, what's your view on Nifty Realty? Because week to date, this still remains the big loser. But the kind of recovery we've seen today, do you think that this is the beginning of an upcycle on the charts for real estate?
Absolutely, I think so too. Reality looks great from here. A good reversal for reality, and in fact, even banking as well. After a few red trading sessions, it has started, gaining some momentum on the upside. Reality sector is trading just exactly at 40 daily moving average, which is at 968, and I think this is the start of a good bounce from here, and it should bounce to at least 20 daily moving average, which is at 1004. So that will be my target in the very short term. But overall, if I see the medium term outlook, reality really looks good. I would start to bet on the heavyweights, which would be DLF and probably even Godrej Properties.
All right, so that's the take coming in on select real estate counters. Let's watch out for that. But like we have been talking about the OMC basket, we did discuss about how the city gas distribution companies are doing very well today. But let's also have a look at the OMCs rather, because it's HPCL which is now at the day's highest point with almost 4.5% of gain. And even BPCL too, that is also, I beg your pardon, actually BPCL is up around 4.5%, and now HPCL is now holding on to the gains of 2%. Arpit, give us your sense on how do you see the OMC basket right now, and between these two, any stock where you would like to recommend your idea, or viewers can actually go ahead and take a buy call on this?
So talking about OMCs, if you see when the market was dull, in spite of that, OMCs are relatively outperforming. And if we look at the chart structure of all the OMCs, within that, BPCL stands as really very strong. So if you see the technical setup on the weekly scale, our almost our range breakout after almost 8 weeks, strong bullish candle. Daily scale from last 3 to 4 days when the market was dull, it was consolidating. And today we have seen a fresh range breakout above 335 levels, strong bullish candles. In last 1 hour, we have seen a good momentum towards from 340 to 346. So I think positionally, definitely BPCL would be the counter to watch out for. And as you see in its life highs is around 370, 380 levels. So looking at the setup wise, BPCL stands out towards 360, 370 levels positionally. Along with that, if you look at the chart structure of HPCL, so HPCL also has been a slow mover, but relatively, if you see, HPCL also trading a life high territories. So right now, it's almost on the verge of giving a consolidation breakout on the daily scale of 446. And I think closing above 447 can definitely trigger good momentum towards 460, 470. So both the setup looks very strong on the weekly and the daily time frame chart.
Okay, so that's the take on some of these OMCs. But Sudeep, we'll come to you. Let's talk about defense stocks. Two big triggers coming in for some of these stocks today. First is that the Defense Acquisition Council has cleared 10 capital acquisition proposals worth 1.05 lakh crore rupees, and second, it's also estimated that India and US are all set to sign a new 10-year defense framework later this year. Two key positives coming in for the defense space. Sudeep, amid all of this news flow, do you believe that this could mark a recovery for the defense stocks that did exceptionally well, then saw a little bit of a cool-off period, and now news flow seems to be in their favor?
There's no doubt about the fact that defense has got a lot of traction and a lot of good things are happening. The only challenge with the defense stock was the valuation was rich. I think, with every order coming in, the valuation got bumped up, and at some level it was unsustainable, and bit of correction was warranted, and that's what had happened. Again, India-Pakistan, that Operation Sindoor time, things started moving up as far as defense is concerned, and now this flurry of defense orders will enthuse the investors to again relook at the defense stocks, and that's what they're doing. That's why the defense stocks are back in favor. Amongst all this, I have been, talking about BEL, Bharat Electronics Limited, for quite some time. The price has moved up quite a bit, and it's one of the best performing stocks in the recent past. But in spite of that, we believe that there is a re-rating opportunity in BEL, considering the performance, considering the opportunity, and considering the potential. That's one stock which we definitely like even at current level. The other is BEML. Again, this company is doing exceedingly exceedingly well, performance is improving, and of course the opportunity size is significant. So these two companies definitely, the shipyards are great, but the valuation even now is a little too rich.
That's the take coming in on the defense pack. The order book is good, but the valuations are not that supportive. But just a few minutes left to shut shop. Let's also get you some of the trading ideas from our experts. And Arpit, you go first. Tell us which is the stock that you are tracking right now.
So we have two counters, one from the energy space, as we already discussed about the OMCs. So our pick would be BPCL. BPCL looks very strong on the daily and the weekly time frame chart, and especially on the intraday chart also, last couple of hours has been very strong. So BPCL would be our first BTC idea. One can go long at current levels with stop loss of, we can revise the stop loss towards 330 for an upside move towards 360. Second would be from the defense pack, Hindustan Aeronautics. So if you look at the chart structure of HL, overall it was consolidating, but finally after almost 6 to 7 sessions, it is given a range breakout above 4,950 and holding well, strong bullish candle. So definitely you can see good upside from here on. So we can go long with keeping stop loss of 4,900 for an upside move towards 5,200 levels.
Okay, so BPCL and HL looking good to Arpit. Somil, what about you? Where are you placing your BTST bets?
My BTST would be, the first one would be IOC. IOC is looking great. A triangle breakout, a momentum indicate has given a buy signal, trading above the averages. Great setup. Stop loss would be 148. I'll just update the stop loss to 148. The targets would be 160. The second stock is ICICI Bank. Looks great. Have taken support at the averages. A small consolidation. I'm expecting this consolidation to break on the upside. Great risk reward ratio at this point of time, because for the last few trading sessions, these banks were correcting a little bit. So great risk reward ratio. Stop loss should be 1420. Target would be 1500.
Right, so those are the calls coming in from both of our experts. Yes, the OMC basket is doing very well, as select financials are making up to the list. And yes, the markets are also heading for a closing that was definitely in the green. So good moves coming in on the markets indeed. But just wanted to have your take on the IT pack, Sudeep, because for the next upcoming week, IT will indeed be in focus. And within the large cap and the mid end of the IT space, there's always the preference till now was given to the mid and the small end. But for now, where the rich valuations are a bit of a concern, do you believe this could once again be the case for IT?
Well, there is absolutely no doubt that the mid-cap IT space, mid-cap and small-cap IT space, the valuations are kind of full. So we have to be careful. But there are a couple of good developments which has happened over the last few weeks, I would say, which should enthuse the IT investors. One is that the famous BBB, Big Beautiful Bill, which President Trump has been talking about, is getting passed, and that envisages a lot of spending. And if that happens, it does definitely benefit IT companies, because spending money in US corporate spending money will definitely flow in towards technology, and that will benefit Indian IT companies. Now, this is one positive development for Indian IT companies. Of course, the uncertainties around US inflation, US recession, and related things hasn't completely subsided. So it's kind of a mixed thing. So I probably will think that even this quarter, when they announce the results, their guidance will be kind of, I think either they will refrain from giving guidance, or they will give a very, very cautious guidance. But I think things are improving, compared to what it was 3 months back, 2 months back. I think things have improved from Indian IT companies. And I will talk about the large cap IT companies as well, because I think the margin of safety is there, because they have the muscle power, they have the strength to grab new contracts when they are up for bidding. Also, the valuation relatively does look decent as far as large cap IT is concerned.
Looking decent for large cap IT names. That's a take coming in from Sudeep. But Somil, give us your sense on where we can expect to open on Monday morning. It's going to be a new week of trade for us. It's going to be full of action-packed news flow. But on the technicals, at least give us a sense of where do you think the Nifty and Nifty Bank could open given the kind of recovery that we've seen in the last half an hour or so. Do you believe this momentum could sustain?
My stance has been very clear. It's been positive in the short term, in the medium term, both. Supports were below around 25 400, 25 200 levels. So markets has given us a very good bounce back from those levels. Now from here, I think the next level to watch out for in the very short term is 25 600. Once that is being taken out on the upside, the next target would be 25 900. So I'm targeting 25 900 in the short term, and in the medium term, of course, the previous all-time highs would be the target, 26 200, 26 300, and even above that. But at this point of time, for the next week, I think the target should be 25 900 for Nifty. For Bank Nifty, again, the momentum indicator has just given a buy signal, fresh buy signal, and my targets in the Bank Nifty would be 57 300. That will be my first target in the very short term. However, for Bank Nifty, I think in the very short term, 58,000 would be my targets in the next coming 1 week.
Okay, so that's the take on the levels to watch out for on Nifty and Nifty Bank. But we're just getting word from agencies that on the GST Council meeting front, we understand from reports that the next date is yet to be finalized. Now remember, there are some matters that the street is expecting to have some clarity on in terms of the GST tax bracket, and a lot of these consumption stocks have been buzzing over the course of the week expecting some relief. A case in point being toothpaste stocks, soap makers, or you have cigarette stocks for that matter, beverages. All of these have been in focus, expecting some cool off coming in from the GST. So we'll be watching out very closely as and when this GST meeting is announced. But well, yes, only a couple of few minutes to go for market wrap. So those are the levels, in fact, that Somil is watching out for. But Somil, before we let you go, another quick take on Monday morning. Which sector could you think could do well given the kind of sectoral churn we've seen?
I think the reversal, where I can see very clear reversal, is banking. Banking looks great. Axis Bank, ICICI Bank, Kotak Bank, all three are looking great. My preferred pick would be ICICI Bank. Of course, ICICI has been consolidating about 20 and 40 daily moving average, and I think Bank Nifty would be a great outperformer next week.
Okay, well, so on that note, we'll let our experts go. Sudeep, Arpita, as well as Somil, thank you so much for joining us on the show. And well, we have 4 minutes left. Let's just start winding down because we have lots to talk about in today's trading session as well as over the course of the week. So first, let's start by talking about the kind of moves that we've seen